Friday, April 14th, 2023, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at the dollar index distraction. Yes, it's a huge distraction, and I'm going to show you why. And I've spoken about this before, but it was quite a while ago, so that's what we're going to cover. Before we do that, just have a quick look at some of the headlines and stories in the mainstream financial press. And why mainstream financial press? Well, because there's an old saying that you need to keep your friends close and your enemies even closer. So that's what we're going to do today a little bit. And that's why I subscribe to the FT. But they've noticed that the U.S. debt ceiling impasse is becoming a problem and could become a problem. There's a pretty big article here that came out, I think it was yesterday. U.S. debt ceiling impasse pushes price of insuring against default to 11-year high. So I spoke about this about 10 days ago with Clive Thompson. We did an interview. I think it was on the 3rd of April, and he was speaking about this. And Clive is an experienced wealth manager. He's retired, of course. He's back in Switzerland. But he seems to think that this time it could be different. And who knows, with all the political division that we're seeing in the United States, what's happening to a former president, what they're doing to the former president. You never know what will happen, and it could be, well, we don't even know the repercussions of a default of a fiat currency, which is strange because Alan Greenspan once said, we'll never default because we can always keep printing. But what if the American political establishment shoot themselves in the foot? It's very, very highly possible. It's coming closer and closer to the time where it could become a problem. I think the latest that they can keep dragging this on until is July, end of July, beginning of August. So we're going to have to keep an eye on that. So the credit default swap, 5-year credit default swap, reached an 11-year high. And the credit default swap is actually quoted in euros. It would be, wouldn't it? Because if the U.S. government defaulted, you'd get paid in euros. But I just wanted to say before we go into the dollar index, the last time that happened was in 2011. Not that the U.S. defaulted then, but it got very close. There was a lot of brinksmanship. And the price of gold made an all-time high back then. And it went from around 1,400 to 1,900 during the summer. S&P downgraded the U.S. from AAA to AA+, I think. Of course, the CEO of S&P eventually lost his job. So things could get very interesting. Another headline, and is something that we've been saying for quite a while, a few years, that the central banks were going to be between a rock and a hard place, that it's impossible to unwind a Ponzi. So the FT coming out with an editorial here, or kind of an opinion piece about banking and savings. After the easy money, a giant stress test for the financial system, central banks are caught between tackling rising prices and ensuring stability, but their actions hold risk for investors and borrowers. What I'm going to do, I'm going to put both these articles below in the description under archive.ph so you can all read it. You don't have to pay for it. So, yeah, Rudy is behaving today on the sofa. We have been for a walk already. He's doing very well. Anyway, dollar index. Why is it a distraction? Well, I will show you why. First, I think we need to look at what the dollar index is. Many people, I would venture to say, if you ask them, what's the dollar index? When did it start? They wouldn't be able to answer you that question. And they comment a lot on the dollar index. So the dollar index was created on March of 1973. And why March 1973? Well, because by then, after Nixon unanchored the dollar from gold, closed the gold window, temporarily stopped the convertibility of the dollar into gold at $35 per troy ounce. What we found was that currencies, the major currencies, started floating much. Well, they started floating against each other because prior to August 15th, 1971, all the major currencies were fixed versus the dollar. The dollar was fixed against gold. The FX market was not the casino that it is today. But by March 1973, there was the FX market. It was fluctuating. I think the Europeans were trying to keep it the old way of keeping it fixed. The Americans didn't care really, as John Connolly said. The dollar is our currency, but it's your problem. So by March 1973, they started this index, US dollar index, and they valued it at 100. And it says here on Wikipedia, it's traded as high as 164.772 in February of 1985, and as low as 70.698 on March 16th, 2008. The makeup of the basket has been altered only once, when several European currencies were subsumed by the euro at the start of 1999. Some commentators have said that the makeup of the basket is overdue for revision, as China, Mexico, South Korea, and Brazil are major trading partners presently, which are not part of the index, whereas Sweden and Switzerland are continuing as part of the index. So there you go. I remember the day when it hit 70.698, March 16th. I think that was the day that Bear Stearns had to be taken over, the day Bear Stearns collapsed. And it was also the day that the price of gold made, back then in March of 08, an all-time high. I think around 1,031, if I'm not mistaken, the spot price. So, and the dollar index was at 70.698. So here's where I want to talk about the distraction. Yes, presently the dollar index is at a monthly, at a low here for the year, very near a low of 100.86. And where are we in gold? Well, we're above 2,000. How can that be? The dollar index has gone up from 70 to 100 and gold is doubled. So there's the distraction. Yes, the present weakness in the dollar index is helping gold in the short term. But as you can see in the long term, all these fiat currencies are sinking. Even with the dollar going up against them, gold is going up even faster. So what I'm trying to tell you here is that, yes, you might want to follow or track the dollar index, but it's a really bad way to hedge currency debasement. And if we look back at March 1973, gold was trading between 80 and 90, $80 and $90. And that's when the dollar index started at 100. And it hasn't been changed, the dollar index. Yes, the euro is there instead of the legacy European currencies. But if you take the euro out and put back those European currencies at the fixed rate that they're put there against the euro, the dollar index would be the same. So here we have, well, it's how many years? 50 years. And the dollar index is pretty much where it was when it was created. And gold has gone from, let's say, $85 to over $2,000. So there's the distraction for you. And I've noticed as well, yeah, a lot of talk about the dollar being weak right now, the dollar index trading towards 100. But there's very little talk about the fact that not just the dollar, but the pound, the euro, the Canadian dollar, the Aussie dollar, the Japanese yen, the Chinese yuan, all those currencies are near all-time lows versus gold. What about silver? Well, silver has done well as well, but it has underperformed gold. And that's why I think there's so much potential for silver. And that's why I hold both gold and silver. And you might want to favor silver right now, I think, because in all major bull markets in the precious metals, silver has outperformed. So if you think we're on the cusp of a major move higher in the metals, yeah, I would favor silver. This is not advice, of course, but looking here at March 1973, silver had a trading range between $2.18.5 to $2.57.5. It closed the month at $2.22. So here we are at 25, almost $26. So silver as well has outperformed the dollar, maybe not as well as gold, but I think that could change fairly quickly. So there you go. Don't let the dollar index distract you. The dollar index is not a good way to hedge currency debasement, and by that I mean the weakness of the dollar. Yes, it's good to hedge the weakness of the dollar against other really crappy fiat currencies, because the dollar and all other fiat currencies, as John Extra said, and I don't tire of saying this, he said this in 1972, all these currencies are IOU nothings, and there comes a point where these IOU nothings lose credibility. And this comes hand in hand with this US debt ceiling impasse. And it would be catastrophic. I think even Janet Yellen said that. And I think she might be right one time about something. But it wouldn't just be catastrophic for the United States economy. It would be catastrophic for the whole world, very short term. It could be a blessing in disguise as well, because we'd be doing away with this massive Ponzi that's been running since August 15th, 1971. So there you go. With that, let's quickly look at the markets, where they are this morning. Just before we go into the markets, I want to say I did the Mike and Mario show yesterday. So I've posted it on my channel already. So don't wait till tomorrow to watch it. If you want to watch it, I'm going to put it up in the cards, or you can just go onto the YouTube channel and search for it. So yeah, it's 8:15 a.m. London time. Yeah, gold yesterday, I was talking about it, that it needed to break 2032, and I said there could be stops and we could move up fairly quickly, and it did. We broke 2032, we went up to just under 2050, and right now we're unchanged at 2040. Range has been 47.75 and 38, so fairly narrow range. Silver, we've traded up above 26 this morning, and I think the silver chart looks very similar to March, just the beginning of the move from the March low at 12, March 2020 low, excuse me, at around 12. It looks like yeah, we've had like 4 or 5 weeks of continued gains, and I actually think we could see a takeoff of the silver price in the next week or 10 days, actually. And by takeoff, I think we could go quickly to 30 and maybe even above 30. That's my view. I'm going to take a view here on the fiat price of silver. Right now, we are up 6 cents at 25.90. Low has been 77 and the high 09, as I said, 26.09. The Dow futures is down 90 points. The Nasdaq 100 futures down 5, and the S&P 500 future is down 3. To the currencies, sterling is unchanged, 125.32. The euro is up about 0.2% at 110.64. The dollar is unchanged versus the yen, 132.50. And the dollar is down 0.5% versus the yuan at 6.84. The dollar is down about 0.5% versus the ruble at 81, around 81.30. I think we were 82 yesterday. The Aussie dollar is down about 0.2 at 67.71. And the dollar is unchanged versus the Canadian dollar, 133.30. Kiwi dollar is up slightly at 63.02. To the general commodities, let's start out with WTI crude. That's pretty much unchanged, trading just below 82. Brent crude is down 0.25% at 85.60. We've got platinum trading at 1,052, so platinum has done well, just like gold and silver. High-grade copper has come back off that 4 level quite well. It's up 0.5% at 4.14. Finish off, we're going to look at the bond market. The U.S. 10-year yield is at 3.45. That's unchanged. The 2-year is unchanged as well at 3.98. So the 3-month T-bill, which is related to the debt ceiling situation, well, that's up 8.5 basis points. That's because that's going to be around the time in 3 months' time when the U.S. Treasury could default. So it's at 5.11%. And if you look at the 2-month, which is a little bit before the possibility of a default, it's at 4.776. So keep an eye on the 3-month T-bill yields. And with that, I'm going to wish you all a very good day. Take care. Bye.